where is it going to play out? Nobody knows. But one thing we also do in all of our offering packages is we do a sensitivity analysis to a variety of cap rates. Sure. That will show the investor, here's what your return would look like if cap rates went up 2% instead of 1%, or 2.5%, or went down. You can see those different, the different returns.
Hello and welcome to Pillars of Wealth Creation, where we talk about creating financial success with a special focus on business and real estate. I'm your host, Todd Dexheimer. Now, let's get to it. Are you ready to start investing in real estate today but don't know where to start? Sometimes investing can seem way too complicated, but it actually couldn't be any easier than with homeinvest.com. You know the co-founder and my friend Nate Armstrong. He appeared on episode 20, and if you haven't heard it, go back and listen to it, episode number 20. Home Invest is a company that allows you to invest in turnkey real estate. Their goal is to build powerful investment tools that make real estate investing accessible to everyone. They have contractors and property managers available for you with the click of your mouse. While other real estate agents can only offer a property, Home Invest brings you a full turnkey package that allows you to diversify your investments, earn passive income, and start building equity in properties. Their simple, intuitive design allows newcomers and experienced investors alike to hit the ground running and to be able to choose the properties when they want and where they want. View easy to understand charts and data to allow you to buy in only a few clicks or just a simple phone call. With Home Invest, you'll be building your portfolio as quickly or as slowly as you would like. And right now, Home Invest is giving our listeners, Pillar of Wealth Creation listeners, a free course on how to finally win in real estate investing. So go to homeinvest.com/pillars. That's homeinvest.com/pillars to claim your free course today. Welcome back to Pillars of Wealth Creation. I'm your host, Todd Dexheimer. With me today is Brian Burke. Brian, how are you doing today?
Great, Todd. How are you?
I am fantastic. Appreciate you joining me. So Brian is the president CEO of Praxis Capital, a vertically integrated real estate private equity investment firm. Praxis operates on multiple platforms, currently managing active syndications for the acquisition of single-family, multifamily, and other opportunistic residential assets. Brian, it looks like you and your company have had over 2,000 multifamily units and some self-storage, mixed use, single-family, so kind of run a gamut of things. I'll let you explain a little bit more about your company, where you guys are at right now, and then maybe we'll talk about where you came from as well.
Yeah, we've definitely had the opportunity to do quite a few different things, which has been it's been an interesting career, that's for sure. That's one thing I love about real estate is there's so many different things that you can do. You can invest in different areas, you can invest in different product types, you can execute different strategies. It never gets boring. And that's, I think, probably the most attractive thing about this business to me. But where our company is now is we focus predominantly on multifamily assets. Most of our purchases are kind of in that, call it 150 to 250 unit count range. We have an artificial minimum of around 100 units. We really don't like to go below that level. But once you get above that, we're all in. So that's the core of our business. We do have a few other things that we do on an opportunistic basis in the single family space and some other things. But I'd say dollar volume wise, about 90% of what we do is centered around multifamily.
Cool. And you're doing syndication on that as well?
We are, yes.
Awesome. So how did you get into buying 150 to 250 unit buildings and why?
Well, it certainly didn't start that way. This is a business where a lot of people that are interested in getting into this business want their first deal to be a 100-unit apartment building. And it just doesn't work that way for most people. And I was no exception to that rule. So, the very first real estate deal I did was buying a small home with seller carryback financing for the down payment. So I got in with no money down, and that hooked me on real estate. I was 20 years old. It was my first real estate investment. I didn't even own my own house. It was my entry into the business, and from there I grew a small house flipping business into a big house flipping business. And through the course of doing that, we were raising a lot of money for our single family fix and flip business. After the real estate crash, we were doing over 100 homes a year in the San Francisco Bay Area. So you can imagine that required raising quite a bit of money to be able to execute that. And, this was a time of distressed real estate, where we knew distressed real estate wasn't going to be around forever.
Was that the most recent crash?
That was the most recent crash. Yeah, I started in 1989, so I've been in this business for a long time, but our business really grew exponentially after that 2005 real estate crash.
Yep.
In kind of that 08 to 2012 space, we were buying, fixing, and reselling, over 100 homes every year. So, it was capital intensive business, but we also knew that, what are we going to do in 5 years when all these foreclosures dry up? We want something that's scalable, sustainable, and that we can, do multiple strategies to, keep the lights on for the long haul, so to speak. And multifamily was the obvious choice, in part because it fulfills all of those objectives, and also in part because I had some history in multifamily as well through the course of growth of our business.
Sure. And what areas you're based in California? Is that where most of your assets right now you're buying, or are you guys in different areas?
We probably have less assets in California than we do anywhere else. It's not really a great place to invest, in my opinion.
Yeah.
So we currently own in Arizona, Texas, Georgia, and Florida.
Okay.
Although we have a lot of markets on a secondary focus where we don't yet own, but have been shopping heavily lately.
Okay. And explain to me, why I get why California, I guess, and I think most listeners do, but why those markets that you're investing in, what do they have to offer that you like?
Well, the first thing we always look for in any market we're going to be investing in is, what do the economic indicators point to in that market? So, from a top-down approach, we're going to look at stuff like job growth, population growth, net migration, especially that inward migration from other states that are considered to be higher cost states. We're looking for states that have, or at least areas that have, a relatively low cost of housing related to incomes. We're looking for moderate development pipeline and a good construction to absorption ratio, household formation, income growth, just all of those different economic indicators that are important to sustaining multifamily rent growth and occupancy growth.
Okay, cool. Real quick, what's your model? Are you guys value add? Are you buying and holding for, let's say, 5 years? Are you long term? What's your kind of business model strategy?
Well, all of the above. We are absolutely a value investor, and anything that we buy, we're looking for some value add component. What we don't want to do is acquire something and rely solely on the market to give us appreciation or rent growth. We want the market to be there for us and help us along the way, but we want to be able to physically do something with that real estate to force some added revenue growth.
Yeah. And are you guys keeping them long term, or is it short, more 5 year?
It's funny, as a career house flipper, you always have the tendency to want to get in and get out, right? And that the speed is important. get in, get out. Multifamily is a different animal. And so, people, we in 2011, we executed a buy and hold strategy on single family, and we started buying, houses to hold. And we developed this rental portfolio. We bought about 120 houses here in the Bay Area to buy and to hold. So people would always ask, when you're in multifamily, okay, you've flipped houses, you've held houses, what do you do in multifamily? Are you a buy and flip guy or a buy and hold guy? And my answer is we're neither. I call myself a buy and watch investor. And so our strategy is we buy the property, we improve the property, we grow the income, and then we watch the market for the optimal point to exit. Now, I think in most cases, the optimal exit point is going to be right around, call it year 3, maybe year 4, after you've done your value add improvements, you've captured the most elevation in your value and that sort of thing. You can get out and take that capital and roll it into the next one. But that might not be the case. You might capture a little bit of additional value by waiting a couple more years. That being said, there's always the question of what inning are we in, right? How often do you hear that? Or is this late stage cycle? Where are we? And nobody knows the answer to that question. But what I do know is that there's a high likelihood that there could be an adverse market cycle that comes into play during the hold phase of any investment that's acquired today. So we also have a long range plan for every asset for a 10-year hold if we needed to hold all the way through to the next market cycle. So when we're raising money for a deal, we always tell people, put your seatbelt on for a 10-year ride. If we get you out sooner, then consider that a bonus, because what we'd like to do is we'd like to sell in 3. If we need to, we'll sell in 5. And if we have to, we'll sell in 10.
That's I love that approach, mainly because that's pretty much my approach right now.
That's a good reason to like it.
Yeah. I tell my investors the same thing. I say, look, we would ideally sell between 3 to 5 years, but you need to be prepared to hold it for 10 to 12 years because we don't know where we're at, and there could be a market correction during our hold period, and you need to be prepared to hold it.
And I think it's even likely that there will be a correction during the hold period. And the big thing comes down to what does a correction mean, right? And people with a short memory will think of a correction meaning that prices fall by 50%, yes. Occupancy plummets by 10 or 15 points, rents stagnate, concessions, become extreme. They think 2006, 2007, 2008 style correction, but that was, it was really a once in a lifetime event. I've been doing this for 30 years, well, 29 now, I guess. I've been watching real estate since I was old enough to understand what real estate was. You don't see that every time there's a correction. A correction takes a lot of different forms. So there are ways to prepare for what the next correction will be. And I just think that people tend to take it to the extreme of what that's going to look like.
What are 3 things you do to prepare for a potential cycle?
Well, I probably do more than 3, but here's 3 that come to mind right off the top of my head. The first one is to have a flexible holding plan and to be able to ride through a cycle if necessary. The second thing we do is we forecast our economic vacancy, which includes physical vacancy, but our economic vacancy, which, not only physical, but you're talking about, credit losses and concessions and all those things. We forecast those to be higher than what's market. So, if we're buying in a market that's at 95% occupied, we're sure as heck not saying that our property is going to be 95% occupied during our entire hold period. In fact, we're going to knock a couple points off the top, right off the bat. And then we're going to increase collection losses some and those types of things to give us some conservative estimates. I think that's the second thing. A third thing that just comes to mind right now, and this seems counterintuitive, but we use floating rate debt, which some people would say, well, why would you do that? We're in a low interest rate environment. Gosh, you should lock your rates in. And, that way, if rates skyrocket, then you're protected. Well, if you're concerned about a downside scenario, the skyrocketing rates don't go hand in hand with a downside scenario, first of all. But second, fixed rate financing in the multifamily world typically comes with very punitive prepayment penalties. And we want the ability to get out at any time without having a prepayment penalty influence our decision. Floating rate debt allows us to do that. If we want to sell in 2 years, 3 years, 4 years, 5 years, we can do that without having to say, geez, we're going to pay $1 million prepayment penalty. We just need to hold it. And then wham, you find yourself in the middle of a recession. So having the flexibility to exit whenever we want, to us, is another way that we protect ourselves from downside scenarios. And I'll throw in a bonus one. We forecast an inflating cap rate. So when we're trying to determine what we're going to sell a property for 1, 2, 5, 10 years down the line, and we're looking at cap rates real estate is trading at today, we're not assuming that's the cap rate we're going to sell for in a future year. We're going to be inflating that cap rate, assuming that this is as good as it gets.
Yeah. Yeah, for sure. How do you decide how much to inflate that?
The same way anybody else does. We take a wild ass guess. Nobody really knows what's going to happen. So we use 0.1% per year. That's just a linear approach that we use. So in a 10-year hold scenario, it gives us a full percentage point on cap rate deflation.
Yep.
Where is it going to play out? Nobody knows. But one thing we also do in all of our offering packages is we do a sensitivity analysis to a variety of cap rates. Sure. That will show the investor, here's what your return would look like if cap rates went up 2% instead of 1%, or 2.5%, or went down. You can see those different, the different returns.
Hey, I want to interrupt this episode real quick to talk to you about Nate Armstrong, our sponsor, Nate Armstrong. He's with homeinvest.com, and you want to get to know Nate. So go to homeinvest.com and just connect with Nate, talk to him, learn about his operation, what he's got going on. He's a turnkey provider, and it may not be right for you, but it could be the perfect fit. So it doesn't hurt. It's a free call, consultation, just to figure out, what they do, what they have to offer. And worst case is you're going to meet a great person who's really well educated in real estate. He's done a ton of different real estate strategies, and probably is going to teach you a little bit, even on a short conversation with him. So go to homeinvest.com and connect with Nate's company. You're definitely not going to be disappointed. It's worth it. So thanks, and we'll get back to our show. We talked about your multifamily. I want to focus a little bit on building a business, which you've done a really good job at. So what are like 3 maybe key factors to building a business successfully? Or what are some of the strategies you use?
It's funny you asked that question, because in the real estate world, it's very common for real estate investors to consider themselves to be real estate investors and not business people. Or to focus so much on the real estate or so much on the investment that they forget about the business side. And, for us, one of the first moves we made was hiring a senior VP in charge of investor relations. And, being able to systematize our processes for raising capital, and having someone entirely devoted to that function and that function only, that allows us to do more investing than we otherwise would have been able to, because we have a focus on bringing that money in. And let's face it, real estate is a very capital intensive business, and that capital is the lifeblood of our growth. So that, I think, was one thing, is having somebody devoted to bringing capital into the business is one. The other is putting some form of attention to your business every single day. And it's very easy for someone who says, I'm going to be my own boss and control my own destiny and so on and so forth, which is their reason for getting into business in the first place, to become complacent and say, I don't really need to work today.
Yeah.
I can go do this or go do that or, whatever else. You got to show up in the office. It's like every single day, it's like I'm here, I'm working all the time. So
Yep.
putting focus, time, and attention and effort into it is critical. And let me think of a third. What would be a good third one? I think being able to delegate tasks that don't have to be done by yourself to others, to allow you to focus on making decisions, coming up with growth plans, watching over the numbers to make sure that you're hitting targets, and that sort of thing is also really important.
Absolutely. What's the biggest mistake you've made, or maybe just a recent mistake that you've made, and how did you learn from it?
Oh gosh, we make mistakes all the time. Let me see if I can find one this morning. I think the biggest mistake that I've ever made was going outside of my core competency. And when you're good at doing something in real estate, and then you begin to convince yourself that you must be good at everything in real estate, therefore it's perfectly acceptable to go and try something completely new, you're elevating your risk profile. And I didn't give that enough enough, what would you call it, time and enough attention to that point. And I think you really got to find something that you're good at and really put a lot of focus on that.
Yeah, I think that's really important, especially as real estate investors, and really any business owner, but real estate investors, newer real estate investors are going to all these real estate meetups, the RIAs, and at least our RIA is more of like a sales thing. These guys, these gurus come in, they pitch their course, which there's nothing wrong with taking courses, at least in my mind, but you got to focus on the one thing. And I see the same people taking this course on wholesaling, and the next month they're taking this course on flipping, then they're taking this course on commercial real estate and so on, and they're just kind of just all over the place.
Yeah, mine was, I got I got into the hospitality business and thought I'm going to develop a lakefront resort.
Sure.
And what do I know about being in the hotel business, right? And it was a huge distraction and a complete disaster. And I probably lost a couple $1 million of my own money as a result of that deal. Fortunately, no, I didn't have any investors in it, but it's why I have this thing where it's like, if I'm going to try something new, I think it's better to try it with my own money and see if I'm any good at it before I go and raise investor money and put them in that strategy.
Yeah, very true. Very true. Yeah. I hear people all the time that are just beginning, they're going to try something new and they want to bring investors. And it's like, maybe you should try it on your own first a couple times before you bring it
or partner with someone. I mean, if I would have partnered with an expert in the hotel business, then I probably would have done great, right? Or they would have said, "Don't do this one; it's not going to work." Right. And if I would have listened, I would have said, "Okay, great." So that's one thing that one of the greatest lessons that I've learned in real estate is that there's nothing wrong with partnering with people.
Yeah.
And if you find somebody that's really good at what they do, and you can contribute and add value to that equation where, as a team, you guys are more than either of you are apart from one another, then that's great. Try a new strategy and leverage their skill to make that strategy a success. And, I've definitely employed that much more as I've grown in this business.
So when you're speaking of that strategy, how do you find that type of person, and how do you approach that? Do you have any advice on that?
Oh man, no, they find you. I mean, that's, I've done this both ways. I've done this where, here's an example. When I was younger in this business, I was 20 years old. I looked like I was 15. And, I'm going to write a letter to someone and say, you're in foreclosure, I'll buy your house and I'll solve your problems. Right. And then you show up and, you look like you just skipped school and you're saying, I'm going to buy your house, and they're just not going to take you seriously. So, I went and sought out partners. Just, the qualification was, you got to look older than I do so that you can go talk to this person, and they'll respect, this conversation, and we'll actually get to do a real estate deal. And, it was a road to nowhere, but later on, I found that, the best opportunities have been ones that have come to me. Somebody comes to me and says, hey, I've got this plan. This is what I'm thinking of doing. Would you like to be a part of it? You could, you can raise capital, or you can run this, this element of it, or what have you. And that has been far more successful, because now I've got people who have really focused on the strategy and put a lot of thought into it, and are leaders in that segment of industry, bringing opportunity, and those tend to flourish. So how do you find that? Geez, the only thing I can say is put yourself out there as an expert in whatever it is that you do. And people who are experts in whatever it is they do will recognize they need your expertise. And when you combine that recipe, it's going to be really tasty. But when you force it, it's a mess.
Yep. Yep. I agree. When you force it, it's awkward.
Yeah.
Right. I mean, if you're, emailing or telling people you want to partner with them, depending on your relationship, of course, it just kind of a lot of times is awkward, especially if it's kind of their business you're trying to partner in.
Yeah, it's a sales pitch, right?
Right.
So it's like being solicited to.
I'm sure you've had people approach you before saying, hey, I'd love to partner with you or whatever. And you're just like, I don't know what value you can add because I really don't know you very well. And it's just
Yeah.
kind of like, you know, it's great that you want to partner and help, but I just don't know how we can do it.
It's
So,
it's a dance, right? I
right.
mean, this is like, being in a singles conference and saying, how do you find the perfect spouse? Well, eh, I don't know. It's like, I've been married for almost, 30 something years now. And it's like, well, how did you get so lucky? Well, it just happened, I don't know. It just, there's no one way to do it, things just happen.
Cool. So somebody is trying to get to that next level, get to, where you're at or on that path. How do they get there? What are some things they can do to help get there?
Well, I think that the biggest problem that people face in trying to accomplish their ultimate objective is to lose sight of their target, or to not put daily effort into doing some step that brings them toward their target. And it could be something small. It's I read these posts on Bigger Pockets all the time from someone saying, I want to buy a 100-unit multifamily property and I've never done a deal before. How do I get from here to there? And I was like, well, what are you doing? Oh, I'm talking to investors and I'm calling brokers and blah, blah, blah. And it's like, well, have you thought about just buying a house to flip? Just to do something, just to show I produced a result. I actually closed on a piece of real estate. I actually qualified for a loan. I
Yeah.
actually fixed something up and made it more valuable and sold it and made a profit. And at least then you can tell that story when you're talking to your investors about your 100-unit deal, right? Uh, it's it may seem completely unrelated, but nothing is unrelated.
Yeah. Yeah. No, I agree. Don't be afraid to start small. I think that's a thing that a lot of people want to just start big and they want to skip the steps. And not that you have to sit there and take baby steps and make it take 10, 15 years, but like you said, you got to start somewhere. You got to partner with the right people. You got to do whatever, but you got to get in the corridor.
Well, let's face it, none of us were born as full-grown adults, right? I mean, when we were all born, every one of us was in the same scenario. We couldn't even feed ourselves. And as much as you think back and you go, God, I hated going to school and and like playing with other kids or whatever it was that you did, you didn't like doing as a kid. It's like you would have loved to have skipped that whole phase, right? Looking back on it. I mean, now where I'm at, I look back and go, gosh, I wouldn't want to have to do everything I've done all over again. I just would want to start right from where I'm at. But
Yeah.
life doesn't work that way.
Right.
I mean, you have to start somewhere.
Yep. Absolutely. So what are your goals moving forward? What's Praxis gonna be doing in the next, let's call it 3 to 5 years?
We're going to be buying a lot more real estate. We're on a growth trajectory. We kind of just have crossed over the 2,000 unit mark. We're aiming towards 10,000 units, and if the market cooperates with us, I think we're going to get there.
If the market cooperates, explain that.
Well, there are times in life where it's better to go golfing or sit on the beach. I mean, God help all those people that were buying tons and tons of real estate in 2005. There are just times when buying real estate is just not the thing to do. And, while one can argue there's always a strategy in every market, and by and large, I don't disagree with that. There are just those times where you just shouldn't be buying real estate. And if that were to happen, it could derail our trajectory to 10,000 units because we might have to stop for a while. And if we get to that point, that's what we'll do.
Are you buying right now?
We are buying right now.
Okay. What's a favorite book, or maybe something you're reading right now that you're really enjoying?
Oh, geez. It takes me like a year and a half to read a book. I don't know. Maybe I should say my favorite book is the one I haven't written yet, because my wife keeps telling me I need to write a book. And I said, I don't even have time to read a book. How am I going to write a book? I just finished reading. This has been a goal of mine for like 10 years. Ray Alcorn's book, The Dealmaker's Guide to Commercial Real Estate. It's a really thick binder. It's like a $500 book. And I don't know, it's something like that.
Wow.
And yeah, $400 or $500. It was written like 10 or 15 years ago. So it's a little bit older, but it's got a lot of great information in it. And I found myself, looking back after a 30-year real estate career going, gosh, I really knew most of this stuff and I almost could have written this thing. But for those that are trying to get into the business, it really is a great textbook. And I'd recommend that to somebody that's trying to learn commercial real estate. Another good one that I like is Gene Trowbridge's book. It's A Whole New Business, and it's all about raising money. Fantastic book on syndicating and kind of the do's and don'ts, and a little bit of a peek behind the curtain on how the whole thing works.
I have fallen asleep reading that book. Maybe 6 or 7 times.
Yeah, right.
Don't read it at night. It's a little dry. It's more just like ingredients, I think.
It's definitely a textbook. It's not a fictional entertainment series, but if you're trying to learn the do's and don'ts, it's a good place to go.
Yeah, for sure. So last question before we wrap up. What are your 3 pillars of wealth creation?
I don't know. What's that mean?
How do you create wealth?
Gosh, I don't know. I came to believe early on in life that the the greatest number of wealthy individuals were made so using real estate as a vehicle. I don't know how much truth there is in that. I think it's a widely held belief, and it probably is a lot of truth in it. Uh, so my, I think, only pillar of wealth creation that I've followed throughout my entire career has been to use real estate as a tool to not only earn income, but also build wealth.
Yeah.
And those two need to go hand in hand. You need to get income off of it, and you need to build wealth. And sometimes people focus so much on net worth, they realize, gosh, I haven't made a dime in 5 years. That's a problem. So look for cash flow, look for appreciation to go hand in hand to build your balance sheet and your income statement at the same time. If there's other pillars to doing this, I would love to learn what they are, because right now I am a one-trick pony. I know real estate and I know it well. And throw me into a stock investing scenario and I'll be very good at losing your money. Throw me into a tech startup and nothing's starting. But throw me into real estate and I think I can do something with that. So I guess I have one pillar of wealth creation.
We'll put real estate, income, and appreciation. We can kind of lump those into our
Do those
three.
all work?
Yeah.
Okay, I'll take that then.
That's good.
All right, I'm going with that.
Great. Well, so Brian, how can our listeners get a hold of you if they want to know more about, what you guys are doing and maybe have a conversation with
Well, there's a couple of ways to learn more about what we're doing, and for people who are interested in getting involved with what we're doing, the best source is our website. It's praxcap.com. That's praxcap.com. It's short for Praxis Capital. That's our company. Great information on there about a little bit about what we've done, what we do, and how to contact our investor relations folks or what have you. If they just want to have a conversation, the best place to go is biggerpockets.com. I participate in that forum a lot. I know you do as well. We answer people's questions about all kinds of things real estate. I got on that site about, I don't know, 5 years ago or 6 years, something like that, just to think maybe I could help answer some questions and give back. It turned into be an amazing resource.
Yeah.
And a great place to not only network, but also, learn and to help other people learn. And, you can always find me there, either answering questions or responding to colleague requests or whatever the case may be. So that's a great place to go.
Cool. I appreciate that. We'll put that on the show notes, praxcap.com and the Bigger Pockets. I appreciate you joining me on the show. Appreciate your time.
Thanks for having me. It was an honor to be here.
Yeah, absolutely. Have a fantastic rest of the day and good luck in your next purchases coming up. I'm sure there'll be some good ones.
Likewise. Thank you very much.
All right. Hey, that was awesome. Special thanks to Brian Burke for joining us on the show. Really appreciate him coming and spending time with us, and tons of valuable insight. Well accomplished gentleman. So a couple of things I took from this interview. First of all, systematize your process. And he talked, basically about capital raising, but systemize whatever process you have in your business, whether it's capital raising, finding deals, selling, whatever it is, your entire business. The more you can systematize, the more success you're going to have into that. And the more you're going to be able to actually step back from the business, go on vacations, do things like that. And it's still to run without you. Next thing he said is bring some focus on building your business daily. So every single day, make sure you're focusing on, not just the day-to-day tasks, but also focusing on building your business. What are you going to do to create a better business, more systems, more processes in place? So focusing on that as well. Make sure every single day you're doing at least a few things for that. And the last thing he talked about is delegating tasks. You don't have to do it all. Make sure, you're focusing on your core competency, and then you're finding others to take care of everything else that's not your core competency. So he said it's a mistake going outside of that core competency. Instead, we can just hire people or potentially bring in partners in order to help there. So
Awesome advice. Appreciate, again, Brian coming on the show, and I hope you enjoyed this episode. I am Todd Beckserver signing out. Make every day Saturday. Are you ready to start investing in real estate today but don't know where to start? Sometimes investing can seem way too complicated, but it actually couldn't be any easier than with homeinvest.com. You know the co-founder and my friend Nate Armstrong. He appeared on episode 20, and if you haven't heard it, go back and listen to it, episode number 20. Home Invest is a company that allows you to invest in turnkey real estate. Their goal is to build powerful investment tools that make real estate investing accessible to everyone. They have contractors and property managers available for you with the click of your mouse. While other real estate agents can only offer a property, Home Invest brings you a full turnkey package that allows you to diversify your investments, earn passive income, and start building equity in properties. Their simple, intuitive design allows newcomers and experienced investors alike to hit the ground running and to be able to choose the properties when they want and where they want. View easy to understand charts and data to allow you to buy in only a few clicks or just a simple phone call. With Home Invest, you'll be building your portfolio as quickly or as slowly as you would like. And right now, Home Invest is giving our listeners, Pillar of Wealth Creation listeners, a free course on how to finally win in real estate investing. So go to homeinvest.com/pillars. That's homeinvest.com/pillars to claim your free course today.